Welcome back to the Token Trends Weekly podcast, everyone. I'm Max Ledge, your guide to the fascinating world of crypto and finance.
And I'm Sasha here to help you connect the dots and see the bigger picture.
So today we're diving deep into a topic that's been generating a lot of buzz lately.
Bitcoin as a reserve asset.
Exactly. We'll be unpacking a research paper from the Bitcoin Policy Institute.
It's called The Case for Bitcoin as a Reserve Asset.
And our author today is Matthew Ferranti,
Oh, wow.
an economist for the U.S. intelligence community.
So we're dealing with someone who knows a thing or two about global finance.
And risk assessment.
For sure. By the end of this deep dive, you'll understand not only the mechanics of Bitcoin as a reserve asset,
But also its potential benefits and risks.
right, so let's define what reserve assets are in the first place.
Yeah, what are they and why do central banks hold them?
Okay, so think of reserve assets as a country's financial safety net.
A kind of rainy day fund.
Yeah, on a national scale.
Okay.
They're typically held in highly liquid forms like gold,
Mhm.
foreign currencies, especially the US dollar,
Right.
and government bonds.
Got it.
Central banks use these reserves to manage their currency's exchange rate,
Okay.
intervene in foreign exchange markets if needed,
Makes sense.
and provide emergency funding during economic crises.
So we're talking about trillions of dollars here.
Exactly. Globally, central banks hold about 12.3 trillion
Wow.
in foreign currency reserves and another 2.2 trillion in gold.
That's a massive amount.
Yeah, it should give you an idea of the scale we're talking about.
Wow, that's a staggering figure. Now, this is where it gets interesting.
Okay.
How does Bitcoin, this digital currency known for its volatility,
Right.
fit into this picture of reserve assets?
Yeah. Could it really join the ranks of gold and foreign currencies in central bank reserves?
I mean, it seems counterintuitive at first.
It does, but the research paper presents some compelling arguments.
Okay, listening.
To understand them, we need to look at Bitcoin's historical context
Okay.
and its characteristics.
Got it.
Ferranti argues that Bitcoin shares some key characteristics with gold. You know, the classic hard money.
Interesting. I'm curious to hear more about this comparison between Bitcoin and gold.
Well, both require significant effort to produce.
Okay.
For gold, it's the physical labor involved in mining and refining.
Right.
For Bitcoin, it's the electricity needed for mining and network security.
Uh-huh.
This built-in scarcity
Yeah.
makes them resistant to arbitrary inflation,
Okay.
which is a major concern for central banks.
Makes sense because they're trying to preserve their reserves' purchasing power.
Exactly.
So scarcity plays a crucial role in determining the value of both gold and Bitcoin.
Precisely. But Bitcoin also has a few unique advantages over gold.
Oh, really? Like what?
Well, for starters, it's far more portable.
Okay.
And divisible. Imagine trying to carry around bars of gold for everyday transactions.
Yeah, that wouldn't be very practical.
Not at all. And unlike gold, which has faced counterfeiting issues throughout history,
Right.
Bitcoin's cryptographic design makes it virtually impossible to fake. Each Bitcoin transaction is verified and recorded on a public distributed ledger called the blockchain,
Right.
ensuring its security and authenticity.
Okay, so we've got this digital asset that's scarce, secure, and potentially resistant to inflation.
Right.
But how does its newness, compared to gold's long history, factor into its potential as a reserve asset?
That's a great question. You see, while gold's legitimacy partly stems from its long history as money, Bitcoin represents a new form of digital scarcity
Okay.
built on this groundbreaking blockchain technology.
So it's not about its age.
It's about being the first of its kind.
Like a new chapter in the evolution of money.
Exactly, and this novelty might actually be a strength.
Okay.
It's tapping into a different kind of historical significance, you know, becoming a pioneer in the world of digital assets.
This is all incredibly fascinating. We've covered the basics of reserve assets
Yes.
and established how Bitcoin shares some key characteristics with gold,
Right.
while also having unique advantages. Now, the big question is, how does this digital asset perform when things get rough?
Yeah.
After all, central banks need assets that hold their value during economic crises.
That's a crucial question, and that's exactly what we'll be diving into in the next part of our deep dive.
All right, so stay tuned to find out how Bitcoin weathers the storms.
Exactly.
Welcome back to the Token Trends Weekly podcast. We're continuing our exploration of Bitcoin as a potential reserve asset.
And as promised, we'll be taking a closer look at how Bitcoin has performed during economic crises.
Right, because when it comes to reserve assets, central banks need something that can weather the storm,
Yeah.
something that remains stable when other markets are in turmoil.
Exactly.
So how does Bitcoin measure up in this regard?
Well, we have to acknowledge Bitcoin's volatility, particularly in the short term.
Yeah.
It has experienced significant price swings and its relatively short lifespan.
Yes, those price fluctuations are often what make headlines.
Right.
But how did these swings impact its viability as a reserve asset?
It's important to remember that no asset is a perfect hedge against every single type of crisis.
Right.
Even gold, considered the ultimate safe haven,
Uh-huh.
has had its share of declines.
Okay, so volatility is inherent to all markets to some extent.
Yeah.
But how has Bitcoin specifically performed during various economic crises?
That's where things get really intriguing.
Okay.
The research paper highlights two specific scenarios where Bitcoin has actually performed quite well.
Okay, let's hear it.
U.S. bank failures and large-scale U.S. financial sanctions.
Okay, I'm all ear. Tell me more about these cases.
All right, let's start with U.S. bank failures.
Okay.
Remember the Silicon Valley Bank collapse in early 2023?
Oh, yeah, it sent shockwaves through the financial world.
Absolutely. And what's interesting is that during that period of uncertainty, Bitcoin's price actually increased.
That's surprising. It seems
Yeah.
counterintuitive.
Right.
But I guess it suggests that in a banking crisis,
Yeah.
some investors view Bitcoin as a safer bet.
Exactly. If people are losing trust in traditional banking institutions, right,
They might turn to a decentralized system like Bitcoin,
yeah,
which isn't subject to the same risks as traditional banks.
that makes a lot of sense. So what about the second scenario, large-scale U.S. financial sanctions?
Well, when Russia invaded Ukraine in early 2022,
Yeah.
the U.S. imposed heavy sanctions on Russia's central bank, essentially freezing a significant portion of their assets.
Wow.
And guess what happened? Bitcoin's price surged again.
So in a situation where a country's assets are frozen or access to traditional financial systems is restricted,
Yeah.
Bitcoin emerges as a viable alternative.
It appears to, remember, Bitcoin transactions are difficult to block due to the decentralized nature of the blockchain.
Yeah.
There's no single point of control that can be manipulated.
That's a powerful feature, especially in times of geopolitical uncertainty.
Indeed, of course, it's crucial to acknowledge that Bitcoin isn't entirely immune to sanctions.
Right.
Governments can exert pressure on exchanges and service providers to comply with sanctions.
Indirectly influencing Bitcoin transactions.
So while the technology itself is resistant to censorship,
Right.
there are ways to influence its use. It's a nuanced situation.
Absolutely. But the main takeaway here is that Bitcoin offers a different kind of insurance compared to traditional assets.
Oh, yeah.
It's less about hedging against general market fluctuations
Right.
and more about protection against specific types of crises.
Yeah.
Those where traditional systems might be compromised or inaccessible.
Okay. I'm starting to see the appeal of Bitcoin in this context.
Yeah.
It's a unique type of asset that can act as a safeguard in very specific situations.
Right.
But what about the long-term view? Can Bitcoin truly be considered a store of value?
Yeah.
A hedge against inflation like gold?
Yeah.
It's still a relatively young asset, so how can we be sure it will hold its value over time?
That's a million-dollar question, and it's one we'll delve into in the next part of our discussion.
All right, so stay tuned to explore whether Bitcoin has what it takes to be a long-term store of value and a potential inflation hedge. Welcome back to Token Trends. We've been exploring the idea of Bitcoin as a reserve asset, examining its unique characteristics and how it's performed during past crises. But now let's tackle the big question.
Okay.
Can Bitcoin be a reliable store of value over the long term? Can it hold its own against the likes of gold as a hedge against inflation?
That's the question on everyone's mind, and it's a tough one to answer definitively.
Right.
Bitcoin's history is relatively short compared to assets like gold, which has been around for centuries.
Yeah, we're looking at about 15 years of data for Bitcoin versus thousands of years for gold.
Exactly.
That makes a direct comparison a bit tricky.
It does, but despite its youth, some research suggests that Bitcoin's price might actually predict changes in expected inflation.
Oh, really? That's fascinating.
Yep.
So you're saying Bitcoin could act as an early warning system for rising inflation?
It's a possibility that researchers are exploring, and it's worth noting that Bitcoin has a key characteristic that makes it very different from government-issued currencies.
Okay, what's that?
It's finite supply. There will only ever be 21 million Bitcoins.
Okay.
And the rate at which new Bitcoins are created is halved every 4 years, a process known as the halving.
So unlike fiat currencies, which can be printed seemingly endlessly,
Right.
Bitcoin's supply is mathematically limited.
Exactly.
That sounds like a solid foundation for potential inflation protection.
It's a core argument for Bitcoin's potential as a long-term store of value. Now, Let's shift gears a little bit and talk about diversification.
Right.
Central banks are always looking to manage risk by diversifying their portfolios, right?
Absolutely. They wouldn't want to put all their eggs in one basket.
Exactly. And this is where Bitcoin's low correlation with other assets becomes really interesting.
Okay, how so?
Studies have shown that Bitcoin's price movements are largely independent of traditional macroeconomic news.
So it's not moving in lockstep with the stock market or bond yields, for example.
Precisely.
Okay.
This means that adding Bitcoin to a portfolio of traditional assets could potentially reduce overall volatility and enhance returns over time.
That makes sense. Now, we've talked about scarcity performance during crises, potential as an inflation hedge, and diversification benefits anything else that sets Bitcoin apart as a potential reserve asset.
Well, let's revisit the concept of default risk. Remember, Bitcoin doesn't have any...
Right. It's not a debt instrument like
Yeah.
a bond.
Exactly. So
Okay.
there's no risk of a borrower defaulting.
It's not a claim on future cash flows like many traditional assets.
Right. It's just Bitcoin a unique asset in its own right.
Exactly.
Yeah.
Now, one valid concern people have is liquidity. Can Bitcoin be easily bought and sold in large quantities, especially for an entity like a central bank?
That's a key consideration.
So can you elaborate on Bitcoin's liquidity in this context?
Sure. While Bitcoin's liquidity isn't as deep as the U.S. Treasury market, for example, it's comparable to gold
Okay.
and potentially even more liquid than some fiat assets that are subject to capital controls.
So realistically, central banks could potentially buy and sell significant amounts of Bitcoin without causing major price disruptions.
That's what the research suggests. And lastly, we can't ignore the geopolitical dimension. We live in a world where the dominance of the U.S. dollar is being challenged. And some countries are actively searching for alternatives.
Right. The idea of de-dollarization has gained traction in some circles.
Absolutely. And research has indicated that Bitcoin could serve as a hedge against geopolitical risks. You know, it offers diversification away from a single currency or political system, which is appealing to many countries.
So to wrap things up, is Bitcoin ready to be a mainstay in the reserves of central banks worldwide?
Well, it's a compelling proposition, and this research paper lays out a strong case for Bitcoin as a reserve asset, highlighting its potential benefits and unique characteristics.
Yeah.
Ultimately, each central bank will have to weigh the pros and cons and consider its own circumstances before making a decision.
Well, there you have it. A deep dive into the captivating world of Bitcoin as a potential reserve asset. Big thanks to Matthew Ferranti for his insightful research. If you enjoyed this episode, make sure to subscribe to the Token Trends Weekly podcast for more in-depth explorations of the world of crypto and finance.
Yes, definitely subscribe.
We'll see you next time.